Hey everyone, it's Dave. Thank you so much for tuning in. As always, today we'll be taking a look at BlackSky Stock. I've had several people ask me recently to take a look at their stock, see if I think the company is a buy, and I can understand why people are asking this. The stock is still down so much from when it came public and from its highs, and whereas a lot of other space companies have really bounced off those bottoms, BlackSky has not really. So a lot of bargain hunters, I think, are looking at it lately. Of course, it's a lot more complicated than just glancing at the chart and seeing that it's cheaper today than it was a year ago. There's a lot more factors that go into it. So let's take a look at BlackSky. First, though, if you're new here, I hope you will consider subscribing by the end of the video. And if you're not new here, well, I'll be sure to check out your comments down below. Okay, with that out of the way, let's dive into BlackSky. As I was saying just a few minutes ago, I think the recent uptick in interest in BlackSky has a lot to do with its compatriots in the space industry and what they've done lately. So looking at Rocket Lab, of course, the biggest stock that I follow on this channel, has gone from sub $4 per share to almost $12 per share. In fact, it briefly did pass $12 per share. So a 3x really in very short order, and obviously shareholders are loving it. AST similarly was down around $2 per share, went all the way past $30 per share. Absolutely massive returns. Shareholders pretty euphoric. It's definitely made a lot of millionaires, but you know, now that it's way up there, investors, I think, looking for the next big space company to move. Another example here, less extreme, but Intuitive Machines, after having a ridiculous spike right after it went public, did drop a fair bit and is now back from, I think, around $3 to $8.30. So still a decent return for Intuitive Machines. Similarly, Redwire was around $2.50, even below that not too long ago, now above $8.50. So another one over a 3x and great return for shareholders. I do hold a little bit of Redwire stock as well. Then you go ahead and look at BlackSky, right? It's also a space company, and the previous chart looks a lot like those other ones did in that it completely fell off a cliff here. The valuation has not really come back, though, compared to some of the other ones. Checking out its market cap here, it's like, okay, it's come back a little bit, still valued under $200 million and not a double or anywhere close to it from the lows. So I think a lot of people out there eyeing this one, seeing, oh, could this be the next space stock that doubles or triples? And that's what we're going to look at today. Now, things were looking pretty dire for the company on a cash basis, and they did have to raise about $40 million through a dilution event that was announced this September. Should give them a little bit more runway, but honestly, I do worry a bit about this company. So, talking about revenue growth, this is the good news. I think they have quite impressive revenue growth rates since they've come public. This chart, courtesy of FinChat, link down below in case you're interested. I'm using it all the time now for my research into stocks. And we can see that their revenue growth rates from 2019 to 2023 were year over year 54% growth, 61% growth, 91% growth, 44% growth, and then on a trailing 12-month basis, we have 43% growth. By the way, if you are curious what BlackSky does, they are an Earth observation company. I've talked about them previously. I'll try to link that video as well in the description if you're interested, or you can check out my backlog. This video today, not so much a big picture, what do they do type one, as opposed to looking at the valuation and seeing if it's cheap and worth a buy. So, continuing on with the charts, averaging the compound annual growth rate over the past 4-ish years is about 52-ish% according to FinChat, and those numbers did kind of roughly jive with what I was seeing in terms of, average growth rates. Looking at their price to sales ratio, because obviously they are not profitable yet, so they don't have earnings we can do a price to earnings on. Price to sales is kind of the closest we have. It's really hard to see too closely here because the price to sales just went through the roof when the stock went through the roof when it came public. Then it crashed down to earth. But we're so zoomed out from the bottom here that I'd like to zoom in to a shorter term chart so we just see this section here, which is more along the lines of where we are now and more reasonable. We're looking at anywhere between a 2.5-ish up to a 4 over the past year or two. Right now, sitting at a little over a 2, according to FinChat once again. Now, debt to equity. Debt is very much a concern with this company. Checking out their debt to equity ratio, it is climbing quite high and definitely something that I would be worried about in terms of the financial health of the company. We'll come back to that a little bit later. As you can see in the chart here, total debt has been rising fairly sharply lately as, those cash reserves are drying up and they've had to take out debt in order to continue to fund their operations, something that has me a little bit concerned because you can do this, of course, but eventually you need to pay it back, you need to pay interest, and there's only so long of a runway you have, so we really need to look at their cash runway, how long they can last, and whether they are the best bargain on the market in the space industry at these prices. There is some interesting stuff going on with the company, I'm not going to lie. So from this recent investor presentation, they did have a line here I highlighted that long-term target is to achieve 80+% gross margin performance. That's extremely strong margins, very high, and if they were to achieve it, that would be absolutely outstanding for the company. Obviously not there yet, but if they do achieve that goal, of course, that would be quite laudable. Other interesting pieces of news is that they were selected as a subcontractor for LeoStella for this new HALO contract, hybrid acquisition proliferated low Earth orbit for the SDA, the same SDA that handed out Rocket Lab a big $500 million deal. Of course, on this one, they're just a subcontractor and they're just getting into basically a pool from what I understand. So no actual money yet changing hands, but it signals there could be interesting things coming from that. And then new business lines. This is interesting, something I never even considered that they might do, but they actually won a contract recently for space domain awareness as opposed to Earth observation. So obviously their Earth observation satellites looking at the Earth, monitoring things, and giving that data to governments and intelligence agencies, militaries, whatever, tracking whatever they need to track. But those same cameras on their satellites can obviously look at things that are also in space. And that's what the picture down below shows. BlackSky satellite imaging a space station in orbit. So this is kind of a new domain, and it will unlock some of their underutilized capacity on their satellites and deliver more revenue. So there is some interesting stuff, but on the numbers side of things, I'm a little bit worried about BlackSky. I made a little chart here comparing BlackSky to some other space competitors to see, what's a better buy depending on what you're looking for. And I thought these were some interesting metrics to look at. Of course, there's all sorts of other things you should look into when investing in a company. No company can be reduced down to a few numbers, down to one chart. You have to think about how confident are you in the management? How confident are you in their technology? In the overall vision of the company, where they want to go in the future, if you believe in that, and so much more. But these are just some valuation numbers to get us started thinking about BlackSky. So price to sales ratio, as I said, right now looking around 2.64. Put that in perspective, I thought it might be crazy cheap compared to some other space companies, considering they haven't had a bounce back, but it's really not. So it's not even the cheapest one on this list. Planet Labs price to sales ratio is under 2 right now. Redwire is 2.7. That one got crazy low for a while. I believe it was under 1. So at those levels, I really should have bought more, and I didn't. But even so, Redwire very comparable with BlackSky in terms of price to sales ratio, just a little bit more expensive. Intuitive Machines, the moon company, if you will, for space, is a little under 5. Rocket Lab, almost 17 there. I love this company for a lot of reasons. The growth rate definitely one of them. So the price to sales ratio, we have to put that in context of some other numbers here. Basically, it's how much investors are willing to pay right now. The lower the number, the cheaper, but in context of growth and other things. So BlackSky growing at 52% per year, as we saw. Redwire actually growing at a whopping 100% per year, which is extremely impressive if they can keep that up. Intuitive Machines right now looking at about 43% per year. That does look like it's set to accelerate fairly rapidly soon, but lately over the past few years, that's the number we have. Rocket Lab also quite impressive, 76%, very strong. Planet a bit weaker here, unfortunately, 23%, and that may have something to do with why they're being given the lowest price to sales ratio. So yeah, very strong growth for BlackSky. Anything above 50%, I've put in the green. Kind of, above 30 would be more of a yellow, and below 30 or 25 would be a red. Obviously, this is all in context of being growth companies that are not yet profitable. If you're a company like a bank or a massive company paying a dividend that's already profitable, 23% is a completely acceptable growth rate. So it all depends on the life cycle of the company, where you are, and what you're trying to accomplish. Operating income now, how much cash are they burning? What's going on with them? BlackSky burning $84 million, and that is on a current assets number that is only $82 million. Now, this is actually even scarier because when you look at the cash in the bank, it's not a ton. Some of these assets in all these companies are going to be, accounts receivable and other things. Redwire operating income, not as scary at only negative 19 million versus Intuitive Machines, negative 61, and Rocket Lab spending massively in that Neutron development program as they're really investing hard into the future and leaning into that future growth and that vision for expanding into medium lift launch. Planet, likewise, I was actually surprised. I didn't think their burn was quite this bad, but these two companies do have a lot of current assets, so the burn ratio is not as bad as it may seem if you're looking at 173 million burn with 752 million current assets. As well, total debt for Rocket Lab, a lot of this coming as a part of this new shelf offering they had with a capped call transaction on it, 473 million. Total debt for Planet is actually quite good, only 24 million. Barely any total debt and lots of current assets, but a higher operating income and not as much growth as you'd like to see with Planet. Again, BlackSky, the one we're looking at today, total debt outnumbering total assets, not something you usually like to see. As well, operating income in the negative 44 million. Total current assets, only 82 million. Redwire as well, things can look a little bit scary on the debt front, and that's one reason why I didn't buy heavy despite the growth. But that's the trade-off you're getting with a Redwire, right? Massive growth, reasonable price to sales ratio, but lots of debt for the size of the company and not a lot of cash in the bank in terms of current assets. Similarly with BlackSky, I would say they're in even more of a precarious situation than Redwire because they are still burning a lot more money than Redwire is, albeit with a little bit more cash in the bank. And the price to sales ratio that you're getting for accepting all this risk, to me, is just not low enough. So looking at all these different companies and the different ways you can think about their valuations, I would say if you want a high risk, high return company, Redwire, based on these numbers, I think is a safer and better bet. Intuitive Machines, if you look into the future of the company and some of the big contracts they've recently landed, showing signs that this growth rate could accelerate, perhaps you want to take a flyer on it. That would be understandable. Again, their current debt situation, not amazing as well in terms of the cash they have on hand. Rocket Lab investing hard for the future. They have the grandest vision of all, I would say, and really want to build a massive end-to-end space company. So if you buy into that vision and are willing to pay a higher price to sales ratio, then Rocket Lab could be your bet. Planet is the one with the most money in the bank and the least amount of debt, albeit with a bit more of a burn rate and a slower growth. So those are your options. For me, BlackSky is not the best option to target highest growth. It's not the safest option. I don't really see the pull to it more than one of these other companies, even though a Redwire, as we saw previously, has already tripled and a BlackSky isn't. That's not the whole story, and what this story is telling us, to me, is that BlackSky and Redwire are priced very similarly in terms of a price to sales ratio, and Redwire looks like the safer bet based on the numbers. Of course, if you want to go super safe, maybe Planet, but you're accepting slower growth rates right now as well, you could look into a company like MDA. So for me, I'd currently take other options over BlackSky. I know the chart looks like it's still super cheap, but it's probably down there for a reason, being they don't have a ton of cash. They just had to have a new dilution event, and they're still burning quite significantly. Also, the grand vision isn't as grand as a company like, say, Rocket Lab or even a Planet, in my opinion, with talking about the searchable Earth and tracking everything every day for everyone and, improving the environment and all that stuff. So BlackSky, not for me. I will, of course, continue to keep an eye on it, and I'd be curious to hear what you guys think. Don't be afraid to tell me why you think I'm wrong, as I always like to have those discussions and regularly do learn things from viewers and channel members. So right now, I am definitely passing on BlackSky. Let me know your thoughts on the company. Always interested to hear, and we'll continue the discussion down in the comments. Hope you enjoyed this video. If you did, please give me a like and subscribe as well. Hope you have a great day and a great rest of the week, and I will see you in the next video. Bye for now.